All right, guys, back to work here tonight, Monday evening already. Weekend flies right by. Hope you guys had a fantastic weekend, but it's back to work here tonight, though. It's Monday evening, getting ready for a very important Tuesday. Of course, we have a very short holiday week here ahead of us, and I want to make sure you guys have a game plan to make some money tomorrow. We have a lot to cover in tonight's video. Got some ranges, as you can see, on the S&P and the NASDAQ. Oil had a party today, bouncing around a little place. Some wild moves on oil. Looking at the charts here tonight, got some big moves on oil, got some ranges on the NASDAQ and the S&P. We have plenty of ways to make money tomorrow. I'm going to cover all my favorite trades in tonight's video to make sure you have a game plan to make some money before the Thanksgiving holiday tomorrow or later on in the week here. Before we jump in, though, and talk about all the trades on my radar for tomorrow, I want to remind you, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. If you guys enjoy the video tonight, do me a favor, will you? Hit that like button for me. I appreciate you guys tuning in tonight ahead of this holiday coming up later on in the week. I know we're all busy people, so thank you so much for tuning in and supporting this YouTube channel. Now, where are the best trades here for tomorrow? Well, again, we got ranges on the S&P, ranges on the NASDAQ. Ranges tell us breakouts, fake out breakouts, rotation, lots of big clues. We'll talk about the way to trade these ranges on the NASDAQ and the S&P here in a moment. Oil, of course, had that wild drop and then pop back up. There's some really easy trades setting up for tomorrow. But you know oil probably has a couple tricks up its sleeve tomorrow. So I want to talk about possibly some things we might not expect that way you're ready for no matter what the oil market throws at us as we hear more coming out of China regarding that spike in COVID cases. Now, speaking of tomorrow, before we jump in and talk about each of these trades here, there is no major news. There's no major news here for tomorrow. In fact, we're not going to get any major news until Wednesday. We have just a barrage, a data dump of news on Wednesday. That's why I said before, tomorrow is a really big day. Tomorrow, you could easily argue, might be the last kind of full open session of the week because Thursday, of course, is the holiday. Friday, of course, is Black Friday. The markets will be open. The futures markets will be open on Thursday, Friday, only for half days, right? Stock market, of course, I believe is closed on Thursday, open for a half day on Friday. So for futures traders like we are in our trade room, you can trade pretty much all week, but you have to think, though, tomorrow probably is the last full trading day. Wednesday, there's just so much news on Wednesday, so it's very difficult to tell if we'll be too choppy on Wednesday. And of course, Wednesday is oftentimes a bit of a low volume trading session, kind of a travel day ahead of the Thursday holiday. So no major news for tomorrow. Right now, kind of the big kind of stuff out there right now is, of course, we got the whole crypto thing going on, right? That is definitely something that is developing more and more every day. That's kind of weighing on the markets right now. What's also weighing on the markets right now is China. We heard news over the weekend about the first COVID death in China in quite some time. China, of course, has their zero COVID policy. So once they get a couple cases, they lock down whole entire cities. And, that, of course, that tells us, right, if we keep hearing about the, kind of aggressive lockdowns in China, oil will definitely want to keep going lower, and it may kind of drag down the rest of these markets. Sentiment right now, pretty bearish across the globe right now between things in China, situation happening in crypto. There's a lot of other things going on, but definitely kind of that bearish sentiment as we go into tomorrow's trading session. So we're going to listen in, and we'll see if we hear any updates out of China. We'll see if we get new developments, right, regarding, we heard from OPEC today as well, which was later on disputed. So tomorrow, big day tomorrow, right? Big day tomorrow. Get there early, right? Make that money. Enjoy yourself over the holiday. Oh, I should also mention, too, tonight is my only newsletter of the week. There'll be no video newsletters on Tuesday the rest of the week here, right? So kind of my one and only video here this week I'll be back next week. We'll pick up where we left off, and we'll kick some butt going into the Christmas season here as we finish up the month of November. So no video newsletter the rest of the week this week. I wish you all a very, very safe and joyous Thanksgiving holiday. Happy Thanksgiving to everybody out there, no matter whether or not you're here in the U.S. celebrating along with us or around the globe out there. Now, back to our charts, though, right? Because, of course, this is where the money is made here for tomorrow. I'm going to cover all my favorite trades tonight across all three of these favorite markets. So if you're serious about making money out there tomorrow, make sure you watch all the way to the end. I'm going to go S&P first, NASDAQ second. We'll wrap things up on the crude oil futures. Let's jump into the S&P and the SPY. Now, normally the S&P and the NASDAQ are pretty much identical, but you'll notice here tonight they are quite different. There's quite a big difference between the NASDAQ and the S&P, and we'll of course address these kind of separately as we go through this. Also be aware too, these are tick charts. You can see all the time frames I'm using here tonight in the upper left-hand corner, so you can find all the time frames there in the upper left-hand corner. Now, on the S&P right now, there really is one really big kind of key insight on this chart here today. We had a pretty sloppy day today on the Emini S&P, right? You'll notice the market pretty much opened up, ran lower into a trading range, and now we have what's called rotation off the low. The market kind of runs below the range, and now we're looking to rotate and run back higher, roughly about the same amount that we went down below it, right? So it's a range-bound market. Ranges are magnets. Ranges are balanced markets. You could easily argue the last couple days have been range bound. You could easily argue this range is nothing new. It's kind of combined or piggybacking off the range that we saw at the end of last week. But the most important factor, at least for me right now, is the fact that we have that trading range. Ranges act like magnets, and when they go below the range like this, if they can't keep breaking this thing down, right, if they can't break out and run lower here, it's the momentum of this now will want to swing and run back higher. And again, it will usually go roughly about the amount we go below to the amount we go above. So with that kind of rotation off the low, anticipating that run going higher, buyers definitely have opportunities to pick their spots on the breakout going higher. At the same time, because of this kind of multi-day trading range, and we know that ranges act like magnets, and we know there's an overall kind of heavy sentiment, kind of a bearish overall sentiment that's kind of pervasive right now in these markets, you would definitely assume that as we try to go higher, lots of bears might be waiting up here for a short right back down into that trading range. So I really want to make sure tonight that you guys know how to trade the breakout going higher, going long, but more importantly too, how to know kind of when to short this thing going back down into that range, because kind of that fake out breakout, right, that failed breakout could easily be one of the best trades setting up for Tuesday's trading session. We do want to try to stay out of the middle. The middle is definitely not a friendly area to be trading. As we go lower, again, because of that trading range, buyers are going to be looking for ways to go back up into that trading range. The big challenge we have now as we go lower is that there's a lot of support right below us. And so again, you think about kind of a bigger picture on the S&P right now, you've got this kind of nasty range magnet right in the middle. If we don't get that rotation going higher, right, breakout possibly going higher, if we don't get that and the market wants to sink back going lower, it's very difficult to want to sell down here because you've got those levels of support right below us. You have to think that buyers would love to gobble up some kind of fake out breakouts going below at those lows here. Again, the fake out breakouts for tomorrow, at least when we see right now in the S&P, really could be some of the best money to make on that Tuesday trading session. So that's kind of the nuts and bolts, right, or the meat and potatoes, if you will, of what's going on right now. How do we make some money on this, right? How exactly do we make some money on this? For example, going higher. Now, there's a couple different ways we can make money buying this thing as we go. We have a good idea of where the market kind of wants to get to, right? We call these pendulum swings off the low. If we can get a relatively strong pop higher, the key to being a buyer up here will be traps, right? Or bull traps. We talk a lot about these in our free trading course. We talk a lot about these, of course, right, in our trade room each day. But imagine now, as the market runs higher here now, again, we're anticipating this rotation off the low. We know kind of where the market wants to get, and on the way up to those areas now, I can look for a bear trap. One of my favorite kind of breakout trades is that strong move, that shallow pullback, that higher high in price. The higher high is very important because that creates that trap right below that low. So as we're going higher here, think about that kind of bullish breakout, strong pop up, shallow pullback, higher high, and that trap will definitely be something to keep on your radar. Now, you also want to think about too is that as we go higher, we may not get that trap. We may get something like this where it may just shoot up, take out some of these highs here. And again, because we have that bearish overall sentiment, because we have that trading range below us acting as a magnet, we might get a beautiful crown reversal for a short back down again. There are a couple ways I can short this thing. First of all, the crown reversal. At this point, remember, at this point, the bulls will have a lot of bullishness going higher. So it's a little bit difficult to want to just short this thing at the high. What I want to do is, knowing that those bulls have all of that momentum at their back, let them try a couple times. And what I always going to tell my students is whenever we see a real strong move in one direction, we have to expect the buyers are going to want to pull back and retest that level. There's a few ways to make money on this. Before we retest that level, now we want to see the buyers try once, try twice, and we can look for this bull trap. Now remember, at this point, the range below us is the magnet, but it's a lot of momentum going higher. So we want to rope in some of those buyers, right? Let them try once, let them try twice. They're trying to take out that high, right? They're trying to retest that high. If I can get a nice 2 try for the bulls, a little trap high above that high, and a nice strong signal candle, right? You guys learn about signal candles in our free trading course on the website. This, of course, would be a beautiful, we call it crown reversal, right? So again, strong pop up. We're kind of reaching the objective there for those buyers. We trap in the buyers. Think about where all their stops are, right? Think about where their stops are. And all I'm doing here is using a level of resistance above the trading range magnet. And I'm trying to run those stops going back down into that trading range. We call those crown reversals. Now, here's another one. Let's say we do get that strong run up, but now the buyers don't try twice and fail. They pull back and they do retest that high now. As we always say in my trade room, mission accomplished, right? Anytime we see a strong move in one direction, we expect a retest of that level and then possibly that reversal back up in the opposite direction. This is the same idea. It's the same idea here. So if we see a real strong pop up here, again, it would make sense, right? That rotation off the low. Strong pop up, the buyers come in, they hold it. Right? They hold it, but they're not breaking out to new highs here, right? They're simply going back and retesting that high. Now, this is one of my favorite types of reversals. We call these 2 try failures and then trade the turn, right? Here's how it looks. Now, once they retest the high, get those buyers coming in. Let them try once. Let them try twice. We now know those stops are sitting right below that low, right? And once I get that nice strong signal now, I can take that short going back down into that trading range. Now, your job isn't over yet on these double top reversals. Once we start getting the market now moving in my favor now where does the market want to go? It's going to want to rotate back in the opposite direction, right? It'll want to basically take out some of these lows on the opposite side. This is where we trade the turn, as we say in our trade room. We mark off a trend line. Off that low, we find a channel up around that high. And what I always do is I look left and I try to find some prior swing highs and look for those traps right above the high of that prior swing. And really just I want to get that short off the top of that new bear channel. Okay, so think about this now, right? We rotate going higher. The buyers come in, they retest the high. Good for them, but we're not quite a bull breakout yet. We'll talk about what a bull breakout will look like here in a moment. And then, of course, we rope in those buyers. Remember, stops are fuel, right? The easiest money you're going to make in a range market is to wait for those fake out breakouts and sell, in this case, sell right back down into that trading range. And then, as I always say, I can take any of the entry patterns you guys learn in the free trading course. This could be a trap, it could be a buyer failure, it could be a pullback combination, right? These are all the same entry setups you guys are learning in our free trading course, which reminds me, by the way, I know that most of you guys and gals have taken the free class. You're making money on traps and failures. I always love getting those screenshots you guys send me of cashing some big paychecks off the free course stuff. But listen, if you're here for the first time today, if you're one of the few folks who haven't taken that free trading class, what I'll do is I'll put a little pop-up there, a little link for you there in the upper right-hand corner. Grab that link and take my free trading course, because the strategy that I teach in that free class will show you a simple trick to know where the winners are going to be each day. And by knowing where the winners are, you'll know where the losses are going to be by default. Skip the losses, take the winners. I'll tell you, if you're missing the best trades right now, if you're tired of taking so many losses, take that free course. It is perfect for someone trying to make the jump into full-time trading, and I have hundreds of examples of all the kind of the entry tactics I'm talking about here on this video. That way, the next time we do get that pop-up, you'll know how to trade that two-try failure trap, that reversal back down, that double top, right, and two-try into trade the turn, and you have a game plan to make some money of those on your own trade account. Now, there's a couple things you want to think about too here as we go higher here. For example, some different variations of this. Let's say, for example, we pop up and there are so many bears up there, the market comes crashing right back down again. This happens all the time right now. Again, it's pretty heavy. The momentum is, the sentiment right now is pretty bearish. If we go up and then V-top off of that high, what you want to think about now is that pop and grind. So if it just pops up and comes grinding back down again, find that new channel off the low, bring it up around that high, and then again, look left, find some prior swings, and you can grab any of the entry patterns you guys learn. Could be a bull trap, right? I love traps. Those are my favorites off the top of that channel. Could be a bull trap, could be a buyer failure, right? Could be a pullback combo. But again, sometimes when you get these big bear markets with these ranges, you won't get any failure up there, right? There won't be a fake out breakout to short, right? It'll kind of go up and immediately run back down in. I don't want to chase it as it goes lower, right? I want to find that new channel by drawing it off the lows, pin it up around that high, and don't miss that first short off the low, off the high. And again, we know where the market wants to go, right? It wants to take out that low, and then from there we can look for the buy going back up, which we'll talk about here in a moment. One last scenario here as we go higher would be, if we do get that breakout, looking at the S&P right now, it's not difficult to think that in the bigger picture right now, there's a range up there, and this could be nothing more than just a rotation back up into that trading range. Now, again, sentiment right now overall, and this is one very big distinction between the S&P and the NASDAQ. You'll notice right away tonight the NASDAQ is a whole lot more bearish than the S&P. They are quite different right now. But, I mean, come on. This is easily a bull market into a range right now. The bears struggled off those lows. This could easily rip and run all the way back up to these big objectives at 40.50, right? 40.50 and 3/4. Now, again, the bears have shown us many times already they're not really having that right now. But again, things can change in a heartbeat. So we do know that bears have a lot of the sentiment at the wind of their back right now. And so I do want to kind of, be aware of that. But let's say, what if we get a breakout that holds? what would be some breakouts, some reversals here going higher that you could actually buy? There'd be two ways to do it. One of them is the pop and grind. The most likely one is the pop and grind. Let's say they pop up here now. We don't get that 1-2 back down again. No, it pops and begins to grind and run higher. If that is the case, if we pop up, again, get that rotation going higher, if they pop up and begin to grind going higher, it's a very simple game plan at that point, right? They pop up, we begin to grind. Now, anytime we see a strong move like that, we're expecting what? A retest of that high. So draw that trend line off the highs, bring it down off that low. And again, we're looking to find some prior swings because that's where traps live. I want to get underneath the 21 moving average because that's where seller failures will be. I can do a trap, a failure, a pullback combo. Again, you're going to learn more about traps, failures, pullback combos. You'll learn that stuff inside of that free trading class, like I mentioned before. In these situations, target a course back to retest the high, and then be aware of that possible 1-2 back down again. As we mentioned before, double top reversal back down again. That could be in the cards there as they retest the high, or leave a runner because the first leg and the third leg are oftentimes symmetrical. So as we go higher here, the first leg is that pop up, right? Trends love to move in three legs, 1, 2, and 3, where the first leg and the third leg are symmetrical. The middle leg is oftentimes kind of the oddball, right? So if you think about it in terms of first leg, third leg, right, that first leg going higher, pull it back, there's that third leg, and that will give you an idea of where that next best target's going to be, in addition to kind of retesting that high. They may also pop this up, right? They may also pop this up. We may hold that pullback off the moving average, and they might jump, right? We call these 1, 2, 3 breakouts, right? So, wouldn't totally surprise me if it took out that high. We pull back to the moving average. Buyers don't try and fail back down again. No, they don't. They hold that pullback and they really jump and run higher. At this point, that's a 1, 2, 3 breakout pattern. And of course, we can mark off that high. I can mark off that low, find that new channel. And as always, don't miss that first test off the low of that channel. Now, obviously, I'm simplifying this right now, right, to keep the video as short as I can get it. But of course, this could be a trap. It could be a failure, right? And again, first leg, third leg, that will give you a good idea of where those targets are going to be. All right, so we're expecting this thing to run higher here, expecting it to run higher. We'll see if it does. If they can hold that pullback, remember, I'm not going to buy that first pullback, right? We're going to wait for them to hold it. And if they can hold it and jump going higher, all right, now we've got that new channel. And we can now dig in and buy that first test with any of the entry setups you guys learn in that free trading class. All right, so that's the game plan as we go higher. You can see there's quite a few options to make money as this thing runs higher. The next question is as we go lower, right? What can I do down here? And again, I mentioned earlier, there's a lot of support as we go here. The NASDAQ is a little bit more bearish than the S&P right now. Again, the S&P has that rotation kind of coming off the low. Why don't we talk about, as the market goes lower, let's talk about kind of some scenarios we might run into here on the NASDAQ here. And I'll kind of come back to the S&P here in a moment, and we'll kind of touch base on the S&P here once we have a general idea on this NASDAQ. Now, the NASDAQ, you'll notice right away, is a whole lot more bearish right now than the S&P, right? They made that strong move down early in the morning. That strong move down kind of gave the bears, of course, anytime we see a strong move going lower like this, we expect what? We expect them to pull it back and want to retest that low. At this point, you'll notice we're basically sitting right on that low right now. Anytime we see a strong move down, we anticipate that deep pullback, that retest of that low. Once we get the retest of that low, do we then see the bears struggle and fail and try to take out those highs and potentially create a big trading range going sideways here? or possibly a full-blown reversal going higher? Or do the bears come through and break out running lower, right? We're very much at a critical turning point right here on the NASDAQ. And you have to think the NASDAQ probably got dragged down a bit more, recently because of the whole FTX, Ponzi scheme debacle they're dealing with there. And the crypto markets right now, right? So we can definitely understand why that might be the case. So that's kind of the key component right now, right? That's the key component. They've got that strong move down. They've retested. We're basically sitting right here in a range right now. Are we going to go up and kind of fill in, kind of create a big range up here? I would imagine bears would love to sell short back down again, selling at resistance above that trading range. Or will the buyers find a miracle, right? It kind of feels like a miracle right now. Will the buyers hold that pullback, and will they be able to hold this into a reversal? There is a pretty nice bullish target overhead there at 11,843 if the buyers can manage to hold something together here right now. As we go lower, this of course is where the S&P and the NASDAQ are very, very similar. We have lots of support down below us. Now, you can easily see right now the NASDAQ is sitting right on that big low. The S&P has a few more levels to go before we get back to that low. But this, whether it's the NASDAQ or the S&P right now, they both share that common factor, and that is below this trading range right now, below these ranges right now, we've got a ton of support. So again, as I mentioned before, as we go lower here, a fake out breakout might be the best money to make there for tomorrow. So we definitely do want to talk about kind of a fake out breakout going lower. And then we'll talk about the actual breakout, right? The actual breakout. Now, the actual breakout looks a whole lot easier on the NASDAQ right now, because you'll notice it's really just that major low, and you've got all of this wide open space until we get down anywhere near any level, right? It's all because of that big run that we saw late in the month of October, early November. So NASDAQ definitely does seem to be a little bit more susceptible to a breakout going lower. You'll notice here the S&P really needs to get a good run lower to clear out below these major lows. You would think the S&P buyers right now would love to buy some head fakes off that low, right? Plenty of levels to work with as we go lower. So what would a head fake reversal look like? How would I buy off of this low? Well, the key is understanding momentum, right? Momentum, of course, is a very, very big a part of this right now. So as we try to go lower, if I'm trying to be a buyer down here, even though we're sitting at major support, even though we have a range, multiple ranges, they're above us, again, sentiment is very sour right now going into this holiday weekend, and so this holiday week ahead of us here. So we really have to kind of make sure we give the sellers in this case the benefit of the doubt. So as we try to go lower here, this is exactly where you want to start thinking about those two try failures. Absolutely. Bears have all the momentum right now. We're at a support level, which I like, but again, sentiment here, momentum here, pretty bearish. So you want to let those bears try once, try twice. Now, I always tell you guys that trap, right? That trap is the best way to do it. It will definitely be the best possible entry because you'll be buying nice and low, right, off of that low. Again, the idea here is very simple. If I want to be a buyer in a bear market like this, I've got to give those sellers a couple shots, let them kind of dig their own grave, if you will, right? Let them wrap that rope around their neck. All their stops now are going to be right above those highs here. And then once I get that nice juicy signal candle, you'll learn about signal candles in that free trading course. That's going to be the catalyst as we go higher. And then think about what might happen on this, right? We may end up running lower. The bears, of course, try a couple times. We're using their stops as fuel. And then where would the market want to go at that point? It's going to want to rotate, usually about equal, right? The amount below the range back above the range. And as the market starts going higher now, there's ways to make money on this, right? Like as we go higher here now, while we're trying to take out that rotation off the low and pin up, right, to take up the side of that range here now. There's money to make on this, right? Now we can go out and look for traps, right? Especially early on in the move, right? So trap in the bears, 1 try, 2 try, buy right into those stops. As the market now begins to rotate off of that low, undoubtedly now trying to complete that pendulum swing, as we call it, back in the opposite direction. We can now look for some traps coming in. Don't be afraid to use that new channel, right? Kind of trade that turn that we talked about earlier. Use that channel high off that channel low, buying it as we go higher. And then think about it, right? If we do end up going lower, we snap back up and retest the high now. Can I sell up here? Oh, I definitely can sell up here. But what was the problem we had on the S&P? Momentum, right? Momentum is the challenge up here. So if we, for example, right, if we ended up trapping in those bears and getting a nice juicy winner, right, off of that low, and then we find ourselves all the way back up around this high, right? I know we're very bearish, right? Overall, we're very bearish, but at this point, though, we're still going to be quite bullish in the short term. This is where, because again, anytime we see a strong move in one direction, this is where a crown reversal comes in handy, right? Pretty much the only way to sell this at that point is that crown reversal, letting those buyers try once, buyers try twice, shorting that trap. Why a trap up there? Well, because again, when we see a strong move up like this, they're going to want to retest that high. Right? You want to sell as high as you possibly can because more buyers are going to come in and buy it as it goes lower. So crown reversal will be your best short if we do rotate off of that low, right? If we rotate from below that low and really run up, it's exactly the same problem we had in the S&P. Momentum is too bullish. Even though we're still in a bear environment, resistance level above the range, want to trap in some of those buyers and use those stops, right, as fuel to run back down. Now they might make it easy on us, right? They may pull back here and retest that high, right? So we get that strong rotation off the low. We trap in those bears below that low, use their stops as fuel, right, to make some money going higher. The market sprints higher, takes out their objective on the other side, and the buyers come in and they buy that pullback, right, and they retest the high. Once they retest the high, again, anytime we see a strong move, we're expecting that retest. Then the question is, do you keep it going, right, for a breakout, which we talked about that pop and grind on the S&P. We talked about that 1, 2, 3 breakout going higher. So the same breakout patterns we talked about on the S&P can certainly be applied in this situation as well. But again, if the buyers can't get it going, right, it might be too much resistance up overhead. We've talked about kind of the overall sentiment a lot here so far, trapping those buyers, right, once, twice. Now, at this point, we don't need to be as selective with the entry because the buyers have already retested that high now. Once I see those buyers have tried twice, I know exactly now where their pain is, and I can now sell right into those stops, going back down into that trading range. If we're really lucky, we'll get that short off the high, and then as the market rolls lower like this, we'll go grab that new trend line, find that new channel, and we can trade this thing again, right, short one more time on the way down into that trading range. Right, makes sense? So strong rotation going higher. Don't step in front of that freight train. Let them try a couple times, then short back down. If they retest the high, mission accomplished. Keep on using those stops as fuel, right? Keep on getting those buyers trapped in and sell back again. And again, if they were to run this thing higher and hold that pullback and really blast, right, and really jump going higher here, or maybe they simply run it up, pop, and grind going higher here. Same idea, right? At that point now, all of that momentum has turned, and now we look for that pullback, right? That retest of that high, and looking for really, again, any of the entry patterns we talked about so far. The bear traps, of course, my favorite. The seller failures, below the moving average, right? And going back to retest the high. And again, it may happen where we might get that move up, right? We might get a 1, 2, 3 breakout going higher. We may get a winning trade off of that low, but they may only retest the high, right? And then 1, 2 back down again, right? So just be aware of that because of the overall bearishness. And again, don't forget, we're going to be doing this together in our trade room, right? To make sure you guys know how to do all this in the right way. I realize I'm covering a lot of scenarios here right now, but I want to make sure you guys have a game plan. And a lot of what I'm doing right now is preparing myself for this game plan tomorrow, right? We never know what's going to happen with these markets. So rather than trying to predict what's going to happen, I want to be ready for anything the market throws at me. When you predict stuff, you only give yourself 1 or 2 ways to make money, right? When you kind of plan your trades ahead of time, then we can keep a nice, even, cool, nice, confident mindset and trade our plan tomorrow morning. Again, as we go lower, right, watch that failure back up again. And that, again, is the one big difference on the S&P. Now, what would be some breakouts going lower here on the NASDAQ? Because, again, there's a lot of space down below. These are pretty easy, right? The breakouts going lower are the same breakout patterns for the most part that I talked about before. If we do take out these lows, if the bears can come in and hold that pullback and really jump off that moving average, this is a 1, 2, 3 breakout pattern. And also we find that channel by drawing it off that low up around that high, right? Find those prior swings and then drill down and take whatever entry pattern I can get off of that high, right? Don't forget, first leg, third leg will help you find some good targets as we go here. It may pop and grind down as well, right? Pop and grind, even easier. Mark off that low, mark off that high, find those prior swings, and don't miss that first test off the high of that new channel. Every once in a while, we'll see a really strong move down, a shallow pullback in price, a lower low in price, and that will give us that trap. These, keep in mind, these strong breakouts, right? Strong move, shallow pullback, lower low in price. You're going to want to get this entry sooner rather than later, right? You won't want to be taking this thing all the way down, near that support level I mentioned before, right? So if it does kind of shoot out going lower, strong move, shallow pullback, lower low in price, you can almost guarantee there'll be a lot of bears right there waiting for that breakout going lower. And again, remember, the S&P doesn't have nearly as much open space below right now. So the S&P is not as easy to justify, not as easy to think we might get that breakout going lower. The NASDAQ, though, definitely does have it. And it's one of the big keys, the differences between the S&P and the NASDAQ right now. So at this point now, I think we've covered a lot of the bases, right? We know how to make money as this thing goes higher. A lot of overlap between the S&P and the NASDAQ, and a lot of key differences there as well. But now we get the game plan ready here for tomorrow. How about some oil? Wrapping things up here on crude oil here for tonight. A wild session on the oil. The most important thing here today on the oil is the size of this very, very strong move here. Anytime we see a strong move, we're expecting to see a pullback and a retest, of that high. Anytime we see a very big move higher like this, we know the potential for a deep pullback is there. Why deep? Because we know the buyers are going to want to buy as low as they can get, right? They're going to want to buy at a discounted price right now. That to me is a very big clue here on the crude oil. So it's a strong move. It's a really big move. And so we'd like to get that nice deep pullback, right, and try to go back and retest the high. So buyers will definitely be looking for that pullback at this point. I talked earlier about the kind of bearish sentiment that we have in the market right now. If for some reason this was to fail, where did the bears want to go? They're going to want to go back and take out that OPEC first it was increase in production, then it was no, we're not, right? Led to a pretty good breakout going lower here early this morning. But we definitely do want to be prepared for if this thing was to fall apart again, because again, we get that issue with China and their lockdowns right now. So we definitely do want to be prepared if this thing turns around and runs right back down again. The next kind of key component on this is this trading range. Now, we've talked about this a couple times already. Whenever we have a market that's range bound and it runs down, then runs back up, there's a lot of kind of a slingshot to this, kind of that momentum as we're trying to go higher here. And really at this point, it makes it look like at this point, if the buyers can keep their act together here. Now, again, a lot of reasons to be quite bearish right now about oil, but if things change here, $85 a barrel seems to be a very, very likely objective. I think it's a very big if right now, if these buyers can actually hold this move here right now. So we've got plenty of ways to make money on oil. What we'll hopefully get for tomorrow is we'll hopefully see a pullback right now. If I can see a pullback, keep these kind of three scenarios on your radar. One would be a pullback down into my buy zone down here. I'd like to get underneath that moving average, trap in some of these bears coming in and use their stops, right, as fuel. We know we have that strong move going higher already. We know they want to retest that high. I've gone and drawn my channel off the high, off that low. I really like this spot here right now for basically a failure pattern, we call them in our video classes, right? Let this thing pull back, get those bears to come in and try to give it a good swing, and then use their stops as fuel. Now, these failures oftentimes turn into pullback combinations. You guys will see a lot of examples of these inside the free trading course, right? So again, a failure pattern, a seller failure below the moving average into that pullback combination. Target, of course, is back up to retest the high. Now, sometimes with these big moves like this, and especially in the situation we're dealing with because it was so wild today, they may really get shot going lower. Right, this market may really nosedive here at some point overnight or early tomorrow morning. In that case, if it really shoots lower on strength, it's not a reversal just yet, but you have to kind of, again, because of the overall bearishness in all these markets right now, you want to give the bears a little bit of the benefit of the doubt on this. And if it really pops lower with a really strong move lower like that, until it actually holds that pullback and reverses, this is where the two try failure comes in handy, right? This is where the one try for the bears, the two try for the bears. We let those sellers try twice, and then we know where their pain is. Then we know where their stops are, and we can rip this thing into those stops for that run going higher. A lot of times, these deep pullbacks into two try failures, a lot of times they'll snap up, and you may not get that kind of pullback combination. A lot of times you'll get that little trap before we go back up and retest that high, right? Does that make sense? Right? So again, strong move up. It all depends on how the pullback looks. If the pullback's really strong, what I'll do is I'll use two tries for the bears, right? And buy it back up again, right? Two tries, buy into stops, and then again, grab that trap off that low, and then look for that retest of that high. And also too, don't forget too, remember with this wild move down, back up, and again, the situation in China is a very big variable. If they were to pull back right now and hold that pullback, right? They pull back, they hold off moving average, and they blast running lower. What do you think's going to happen next? They're going to want to retest that low. And so we're not going to chase after. We'll find that new channel off that low, mark up off that big high, right? Find that, find those prior swings. And again, we'll drill down and look for the entries off the high of that channel. This is nothing more than a 1, 2, 3 reversal pattern. And then look for that first test, right? That short off the high of that channel. Target's easy, right? Back down to retest the low. We may also get one of those V tops, right? Those kind of V tops where they pop up, they pop lower, and again, because of the overall bearishness, it may just start to sink and grind down. If that happens, it's even easier. Now we pretty much ignore that bull channel. We mark off that new low, off that big high, and again, we're simply going in looking for that short off the top of that channel, right? This is the same idea we talked about earlier to short that pop and that V-top on the S&P and the NASDAQ. This could easily happen here on the oil as well, all right? I also want to bring to your attention too, if we keep going higher, right? If we keep going higher here as we go, you can try to get one of those strong moves, shallow pullback, higher high in price. The only way I would buy this as we're going higher right now be traps, right? So stuff like this, right? So, strong move, shallow pullback, higher high, that trap. So that would be the only way I would want to be buying as we're going higher here right now, right? You want to buy as low as you can possibly buy, and that's where traps come in to buy nice and low. What the more, kind of the bigger potential reward will be if we do keep on kind of grinding higher here, is just simply waiting for the same game plan, right? Waiting for that pullback, trapping in some of those bears below the 21 moving average, using their stops as fuel, grabbing that failure into pullback combo, and trying to go back up to retest the high, right? Failure, pullback combo as we go. Or again, right, if it was to really shoot lower, that's when you want to use that two-try failure, right? Bears once, bears twice, and buy into those stops going back up. So as we go higher here, if we go higher here overnight or into the pre-market tomorrow, again, the only real kind of safe way to do it is as we go higher here, you're looking for traps, right? Traps as we're going higher. But don't be surprised though if eventually here the buyer's going to run out of bullets up there and we end up getting that deep pullback, trapping in some of those bears, right, and using those stops as fuel. That is a much more desirable trade down there because now you get a small amount of risk for a much bigger amount of reward. That's the type of paycheck I want to cash before we start eating some turkey and stuffing, right, for Thanksgiving later on this week. So keep that in mind as we, right, if we do continue kind of going higher here on the crude oil. All right, guys. So now at this point now, we get a pretty good game plan. If we go higher, we know don't chase it too much. Wait for that nice deep pullback. Once we get that pullback, the gauge will be how strong that pullback is. And again, will that pullback turn into a full-blown reversal? No matter what happens now, you have a game plan to make some money on this stuff, on the oil, on the NASDAQ, and the S&P. Now we get a good night's sleep. We come back tomorrow and we trade this stuff together tomorrow morning in our trade room. Don't forget, we trade this strategy together 8 o'clock Eastern time every morning. I would love to have you there trading right along with us. If you're sick of missing the best trades each day right now, if you're taking too many losses, if you're not getting the results you want out of these markets, come out and trade it with me every morning just after 8 o'clock Eastern time. I'll put all the membership links, all the free course stuff down in the description of the YouTube video. So definitely grab that and join the free class. Learn the basic strategy. Start making money on that on your own account. And you'll be ready to trade with us here sometime soon in our morning trade room. And if you have any questions, right, don't be afraid to call the office. Again, there'll be no video newsletters the rest of this holiday week. I will be here, though, checking emails, checking comments, and my phone will always be on, right, no matter where we go over the holiday week. So don't be afraid to call the office. If you have any questions about getting registered as a free member or as a trade member, I'm always here to help out every step of the process. The easiest way to get help is to pick up the phone and call us or use live chat on the lower right-hand corner there. All right, guys, I'm going to wrap things up here for now. It's been a long video here tonight. Hope you guys learned a bunch. Hope you use it to make some money tomorrow. Don't forget, tomorrow morning, all the members, we'll see you guys tomorrow bright and early in the trade room. And I will not be back tomorrow night with our video newsletter. I will see you guys the Monday after the holiday weekend here. If I don't see you guys tomorrow morning in the trade room, though, have a great, happy Thanksgiving. Be well out there. Be safe traveling out there. Don't eat too much. Okay, all right, yeah. Eat as much as you want. It's the one time of the year where we can go big, go big at the table on Thursday. But all kidding aside, though, hope you have a fantastic holiday. Travel safe out there, and I'll see you guys back here Monday evening. My name is Joseph. As always, be well, be nice to each other, and be here next week. Happy Thanksgiving. Adios, amigos. Bye-bye for now.